We're going to do some trading with Tom here as well on these reports. So, John, let's start with what's in the direction of the market right now, which is lower, and that's Facebook. Down about 4%, in sympathy with everything but Alphabet right now. That seems to be the bias for these companies. So do we just look across the board and say, well, they're all down for the most part and they were all good, so this is general profit taking? Or is there anything specific here for Facebook that could have gone better?
Well, thanks for having me. Yeah, so I think with Facebook, there was, I think you have seen a lot of the appreciation, and I think there maybe was on the margin, maybe a little bit of disappointment that there wasn't the kind of revenue acceleration that we saw with Snap and with Pinterest, which accelerated to over 60% or 58% revenue growth. You're not going to get that with Facebook; it's just too big. But maybe there was a little disappointment there. And then with Alphabet, with Google, I think the upside was that social media obviously benefited from in the third quarter with the sort of the comeback of ad spend, particularly on the digital and online side. But there was sort of the idea that it was more social media and not search, but quite clearly that's not true. Search was also very healthy for Google, up 6.5%, which is a great recovery from the previous quarter. And then YouTube with 32% year-over-year growth. I mean, I think that clearly shows that at least on the digital and online side that ad spending has or did come back. I think there's a question about, right, with the pandemic resurgence, whether that's going to be sustainable.
So right now we've seen advertisers swing back with some pretty good force, and that's showing up in a lot of these numbers as the companies are connected, especially Facebook and Alphabet, through the advertising spend. For Facebook's user base in particular, John, are you impressed with the way they've continued to accrue daily active users, monthly active users? Both these metrics were higher than a year ago.
Yeah, I thought that was impressive, particularly now that there is more competition for eyeballs on social media. It's not just Snap and Pinterest, but you have TikTok in the mix now, and others that are emerging. So yeah, I thought that was impressive. It didn't surprise me also that monetization or average revenue per user (ARPU) wasn't as up. Didn't recover, fully. And I think all of that sort of combined to, for me, I was actually impressed with Facebook's results, given the situation. But I think with Facebook also, I mean, it's our opinion, and I think it's true. They have a bigger regulatory scrutiny, particularly in a situation where you have a Biden win, than Facebook, than Alphabet rather. I think, I always come back to the point where nobody blocks their friend for 30 years, right, out of anger because they didn't like, the search results they got. Facebook is that emotional social platform, and the rhetoric has been particularly divisive recently. Maybe that and you combine that with, the government scrutiny. I don't know. There might be a little bit of a backlash coming for Facebook, but yeah, I mean, I wouldn't. I'm not sure if I would. Bet on, like, we have a hold on Facebook for now. I think that's safe, but you're definitely seeing some glimmers of hope and some light at the end of the tunnel.
Hey, one thing here, just real quick on Facebook, John, because we're going to do a trade on it real quick, then come back to Alphabet. Alphabet. For Facebook, are they doing enough to monetize Instagram right now, or is Pinterest going to take that e-commerce / social combination away from them a little bit? I mean, these Pinterest numbers were incredible this quarter. Are they using Instagram to everything it can be right now?
Well, that's a great point. There's probably some degree of competition and overlap between all of the social media guys, but I think Pinterest and Instagram have they're closer, right, than say TikTok, for example. But they are different. So I think the dynamics are a little bit different there. And in terms of monetization, Facebook really hasn't even started to monetize Instagram yet. And I think that, I mean, and let alone WhatsApp. And I think that's really part of the forward growth story that people can really sink their teeth into, before some of the more pie in the sky things like VR, which I think are coming, but definitely more down the road.
Okay, let's do some trading here. Stick with us, John. I want to bring in Tom. We're going to put some of these thoughts to work. Tom, so John's got a neutral position here on Facebook for the moment. We do see the overall market dropping. Facebook's down 4%. That brings it just below 270. Still, though, well off September lows, which does distinguish it a little bit from some of the other big tech names we're going to talk about today. What do you see in options, Tom?
Well, there's still some option premium just due to the fact that we're starting to see that pullback here in Facebook, but I think it opens up some opportunities if you have that neutral to maybe bullish, slightly bullish sentiment here. So I went out to the November series, the monthly options cycle. So you've got 21 days till expiration, about 3 weeks, right, Oliver, post-election. And I'm looking at selling an iron condor, but skewing it a little bit towards the upside in case Facebook does reverse. We got a bunch of price target hikes today, most of them over $300 a share. So I went and looked at selling the 265, 260 put vertical. So that's just out of the money to the downside, about $5. And then selling the 300, 305 call vertical, creating the short iron condor. It's neutral, but you can see from a risk profile that it's slightly bullish in stature because you've got break evens all the way down at 260, 240 to the downside. And then all the way up at 302.60 if on the upside, if you collect $2.60 credit on this. Now, the risk reward's better than a 1-to-1 because that put vertical is so close to the current share price. But this might be the way to play it if you feel that Facebook's going to consolidate above 265 and start to grind higher a little bit, and time decay or theta is working in your favor. So this thing will contract in price throughout the next 3 weeks, allowing you to buy it back cheaper or letting it go out worthless.
All right, you got a long range, a wide range that this can operate within, but definitely you've got bias to the upside here. 4 different options contracts, 2 different parts of it to get that condor, and about $6 to the downside is the room you're giving yourself. Okay, Tom, hang with us because I know you got one more on Alphabet. John, you're still here. Let's talk about Google. Right now, it's the one that's shining, up 6%. And it seems like they really have put to the side, I don't know if they've killed the fears, but a year ago it was all about traffic acquisition costs and margin. Seems like from these numbers, that's not a concern right now.
Yeah, no, that's true, and I think you'll see a lot of those kinds of numbers with traffic acquisition costs kind of swing, out of perhaps out of time and influence, over the next couple of quarters, just because of the COVID-19's sort of impact on ad spend and that sort of wave of disruption that I think it has through the whole sort of ecosystem. But ad spend is definitely back, and search makes sense that it's coming back because that's what you invest in as an advertiser if you need sales, and not just to build your brand, but you need to get leads and you need to get and you need to get turn those into sales quickly. So it makes sense that there is a comeback here. Okay, and where's your rating right now on Alphabet? It's looking like it's the only one that wants to make a push to the previous highs. Yeah, we still have strong buy on Alphabet. Also note they still have just a tremendous amount of net cash. It's even significant as a percentage of market cap. And then you list all of the the lottery tickets, right? The other bets, the things like autonomous driving, autonomous vehicles, quantum computing, and TensorFlow and AI, machine learning, all associated with cloud. Those are things that haven't even started to get going yet, but they are very real. They're futuristic, but they're definitely there's definitely real potential there that I think sometimes people forget with the whole when they're looking at Alphabet and Google and all of the things that change from a quarter to quarter basis. Okay, great stuff, and thanks, John, for the thoughts here. It seems like the right view on Alphabet right now, and being the most bullish on that one. Strong buy, up 6%. John's joining us from CFRA. We still have Tom from the network. Tom. All right, so you got something a little bit more bullish on Alphabet here? You still want to hedge yourself like in the Facebook trade?
Yeah, you definitely want to stay risk-defined here, taking that neutral to bullish stance in Google Alphabet. But you don't want to be a hero, right? Because of the fact that you're seeing some of the moves after some pretty good, solid reports out of the FANG names, even though Google Alphabet's up. We want to take that neutral to bullish stance. So I just went out to that November monthly series again, 3 weeks to expiration. and selling a put vertical to the downside. This way, it still gives you a cushion, but you're still taking that neutral to bullish stance on the stock. And I looked at selling the 1600 strike and GOOGL. So these are the A shares, Oliver. Selling that 1600 strike, buying the 1590. It's $10 wide. You can roughly collect about $3 credit on this $10 wide short bullish put vertical. So I'm collecting nearly a third the width of the strikes, which is what you kind of shoot for as far as guidelines go. You can collect $3. That's basically what you can make on this particular trade with $7 in risk. But you see that break-even point all the way down at 1597 to the downside. So you've got that big cushion. You've got a good probability of success. This takes advantage of time decay or theta that works in your favor, and you profit in 3 out of 4 scenarios on this type of trade, Oliver. If the stock moves higher, consolidates, or moves lower, but remains above that $1,600 level over the next 3 weeks.